Vincenzo'S Gold Crypto Investing, where you like, subscribe, and share for a one-of-a-kind, company-made, computer software trading, probability-based, trading alert, technical analysis, and company philosophy, as I'm your most trusted source for blockchain technology and cryptocurrency breaking news and coin updates here on YouTube and in the cryptocurrency sphere. And that's right, old Vincenzo'S brought back truth and, most importantly, integrity back into the trading market, right? Oh, that's fucking not good. And you can see here in the coin world today, it was a kind of a volatile day on the stock market as the dollar started coming up and Bitcoin and the stock started going down. And you can see now you're in this Bart Simpson formation right here, right? Where you pump up, and you got that jaggedy Bart Simpson top, and then a crash. This is usually very bearish, right? When you have these Bart Simpson looks, that's saying there's a lot of heavy sell pressure. And to me, this weekend, on a thinly traded, we'll go this way, on a thinly traded weekend where the futures market's closed, I could see it just kind of dancing around within 1% or 2 of even. And then next week, as the futures market opens Sunday, I could see this getting very bearish and getting forced to the downside, right? So this is something that we need to watch out for and to stay and pay attention. As you got major pattern that you could be breaking down. It's not a major pattern, but it's a continuation pattern to the downside from this bear flag that you broke down out of. And this could just be a nice continuation pattern to lead you to the next level down. And a first initial double bottom low at the wick bottom at 25,401, and then a targeted move of 20,992 out of that bear flag that you broke out of up here. You see that? We have, well, there's writing up there somewhere. I don't want to zoom out right now, but that's what you could be breaking out of if you break down out of this, right? Now, I'm not liking the looks of this. After this consolidation, the volume is dead, the sentiment is bearish, and it seems to me the next move of this is down, right? And I would be very cautious over the weekend if you're playing any leverage plays. Be very, very cautious, and know the next major move is more than likely to the downside, right? I'm thinking to the downside to the next move, and I would be watching cautiously for a move down to that $25,000 mark, right? On any move up, that orange ring of 31,238.35 and descending would be your major overhead resistance, and is going to act as something to smack and beat you down at every opportunity, right? So that's what you're going to look for there. If you're looking at the XRP, which everybody loves, you're in this little symmetrical triangle. It's not really a symmetrical triangle. It's just, if I can't, I'm doing things. I had a funeral today. A family member passed away, unfortunately. So today there weren't a lot of updates. I'm actually just leaving my grandfather's house and going back home and have to deal with the burial tomorrow. But you can see I just made this little consolidation so you can kind of look at it and see where you're trading at. And this could be a nice little bear flag. Right in the technical target to the downside would be into the shit house. But what I'm more looking at here is a breakdown out of this. Is I'm looking at you come down to that 36-cent double bottom, or 36 cent near the double local bottom at 33.6, right? Just over 33.5 cents. And that is what I'm looking at right now as far as a move to the downside. If you break down out of this, you got the 200-day moving average right there in the middle part of the orange support zone. And we know the orange support zone is the last line of defense, aka get my shit together to the shit house. And if you break this major support, or brief, not major, brief support, you're likely to dip back down here. And that's where your next major move's got to be, because if you break at any point this orange support zone, you have a quick flush of 20 to 25% to the 28 cent mark, right? And that's just to maybe try to find some regional support. I think I left it there, right? And that's what that would be right there. If you can't hold that, that would just be, that's going to be brief support there that I do not feel that would hold, right? And that's what to watch out for. But on the upside, if you're trying to get bullish, that 200-day is almost right on the price now in the hour time frame, and you got to break above that in the hour time frame and to get on top of that 46 cents to get bullish. But there's so much bearish sentiment right now, I just don't see a way that it's going to happen with the Fed, right? And all kinds of other things. And if we look at, let's look at the stock market real quick, right? You can see that, so that's XRP, the major coins that everybody cares about. The coins were down today, right? And then they tried to slowly consolidate some of those losses later on in the day, but it's still not looking good, right? And if we look at the stock market, we can see the Dow Jones, Apple finished up, but it was down 2% today. It was up 2%, and it finished even, but very bearish. The stock market is getting close to breaching that $30,000 key level. You can see September's futures are down to $30,600, $786 down, even though the Dow Jones is up $8 today after a volatile up and down day. I believe the futures market is telling you and foreshadowing what's going to go on next week in the stock market, and I think it's going to be down and down big, right, as we're getting ever and ever closer to another 50 basis point rate hike, right? But if we look at gold, say what you want about gold. Everybody's saying gold, because people get misconstrued with gold. Gold is not there, the bullion, to get your spot price to get you rich. Gold bullion, what it does is it preserves your wealth, right? And you can see over the last year, stocks and cryptos are down 30 to 80%, right, in individual stocks. Gold's only down a couple percent. Gold today, inflation equivalent, 20 years ago, you have the same purchasing power, and that's the power of gold. You hold your purchasing power. You never lose it, right? You're not going to make massive gains. Every now and then, year over year, gold may go down per ounce, but decade over decade, if you bought a gold bar a decade ago, a decade, 2 decades later, that purchasing power is still going to be there, right? If you exchange the bullion for an asset, right? Unlike crypto, you've lost 60 to 70% of your purchasing power in Bitcoin within a matter of a few months. That's the difference. But you can see gold's been holding up quite nice in this last sell-off. As you can see, this last market sell-off where crypto's down, Bitcoin's down 40%, altcoins are down 60 to 90% across the board. And the stocks, the major indexes are all down 20, 25% in bear markets, and individual stocks are down upwards of 70%, 80%. You can see gold from its recent high to current price is only down 10.3%. So everything else across the board is down 30, 40, 50, 60%, right? Gold's only down 10% from its recent high. In the same period of time, the stock market's down 30%, the Nasdaq's down 25%. Cryptos are down 50%, right? So gold's doing its job, and gold's in the initial stages of a crisis is selling off slightly, but holding up better than the rest of the assets that are collapsing. And gold eventually will get its footing and will eventually take off to the upside, right? And I believe that if you buy these gold and silver mining stocks, right, you're going to do phenomenally well. I've showed you my portfolio time and time again, what I'm adding to. And I believe next week we're going to add slightly, maybe $1,500 or $2,000 to that position and the various ones of the stocks that I own, right? Because you can see we're having more warning signs. Inside Wells Fargo town hall to explain mortgage layoffs, right? Major layoffs hit mortgage startups and traditional lenders, right? Detroit Free Press, mortgage industry layoffs, buyouts ramping up in Metro Detroit, right? And why is that happening? Because you're at the beginning stages of a housing crisis, and right now we're in stage 1 denial, right? Stage 1, things are starting to happen Mortgages and banks are laying the mortgage and housing people off. Home supply is rising. Interest rates are rising. 30-year fixed rates are nearly 6%, right? And you're in denial right now, and people are watching these warning signs fly. And I can only tell you so much and so many times about what's going on and these things you need to be paying attention to, right? And this is starting to happen now, of course. Well, I mean, God, the free press is the same. So let me read the article, right? But it's going to be bad. Things are lining up for a catastrophic crisis, and the federal government, or the Fed right now, and the criminal gangster, the criminal gangster cartel that has infiltrated the federal government, United States government, Federal Reserve, and the world banking system in order to rig the markets, right, and fleece, heist, and shice the average American, right? But I'm here to tell you and warn you of the criminal gangster cartel and the henchman, Jerome Powell, as he's still planning on tanking the markets, right? Oop, that's not where I want to be. He's still planning on tanking the markets and sucking capital out of the banking system because he's a member of the criminal gangster cartel. And they have infiltrated the Federal Reserve, the United States government, and the world banking system, and they've hijacked the United States and the policymakers and the world's banking system has been hijacked. And these guys right now, Jerome Powell, is telling you the markets are rigged to the downside. He's crashing housing prices. He's going to try to squash inflation, which means to suck capital and liquidity out of the market and to drive the prices down and drive economic activity down, to lower oil, try to lower gold prices, commodity prices, energy prices, but it's gonna tank the banking system. And if he keeps the squeeze on long enough, you're gonna get the debt bubble pop, and that's the worst possible outcome out of this whole thing is the debt bubble to finally pop. Because if the debt bubble pops, there is no going back. You have a mass crisis, and you have a Greece-style bank run and liquidity crisis, right? And it's not fun, and there's no way to dodge it, right? And that's what the Federal Reserve criminal banksters and the market manipulators that have infiltrated the Federal Reserve, the United States government, and world banking system, and they're rigging the markets to the downside. And the only question now is, how far to the extreme are they willing to take this to the downside before they get called uncle and have to reverse course? Right? Because every month they go, because next month they're going to raise interest rates another quarter basis point. So you're going to get mass sell-offs into that. And then there's going to be a breaking point or a coming of Jesus moment where they're going to have to decide, are we going to keep crashing the markets, or are we going to start printing and expanding our debt bubble again to make everybody feel rich, and it's more politically beneficiary to have the debt bubble expand rather than to try to fight inflation and shrink the debt bubble and make it burst, right? So that's what we're watching out for, and that's what you need to look out for. There's a lot of things going to be going on and a lot of things we need to discuss. Like, subscribe, and share. Hit that bell notification. Peace and love. Peace and love.